We were made a promise. Back in 2024, experts kept saying, be patient. Once interest rates come down, the market will finally breathe again. It's now January 2026. The Bank of Canada has cut rates. Credit is cheaper. And yet, is it actually easier to buy a home today? For many Canadians, it has become nearly impossible. So the question is simple. Why did the relief everyone was waiting for turn into a national dead end? Today, we're breaking down the 2026 real estate paradox. Welcome to Billy Archi. What we're experiencing right now is what I call the spring effect. Between 2023 and 2025, hundreds of thousands of Canadians put their lives on hold. They were waiting for the signal. And the moment interest rates slipped below 4%, everyone jumped back into the market at once. The result? A brutal bidding war. The rate cuts were instantly absorbed by higher sale prices. In reality, buyers didn't gain any purchasing power. They're paying the same monthly payment for a much more expensive home. There's one number you absolutely need to understand this year. 1.2 million. That's the number of Canadian households renewing their mortgage in 2026. Most of them signed in 2021 at rates around 1.8%. Today, even after rate cuts, they're renewing at 4.5% to 5%. That means an increase of $200 to $500 per month for an average family. This is no longer just a buying crisis. It's a survival crisis for existing homeowners. And quietly, without saying it out loud, we're starting to see panic selling. When you look at building permits and new developments, a clear trend emerges. The single-family house with a backyard is becoming a luxury item, almost like a collector's car. What's being built today isn't about dreams anymore. It's about optimization. Asterisk missing middle housing. Single homes replaced by triplexes and townhouses. Asterisk accessory units. Garages and basements converted into rental units to help pay that 2026 mortgage. Asterisk modular housing. Factory-built homes designed to fight exploding labor costs. The future of housing in Canada won't be bigger. It will be denser, smarter, and far more constrained. In 2026, Canada's map is changing. Toronto and Vancouver have become completely inaccessible for anyone earning under $200,000 a year. The middle class is leaving. They're moving to Quebec City, Calgary, Moncton, often bringing profits made in Ontario. The consequence? Prices explode in markets that used to be affordable. Toronto's housing problem has now become Canada's housing problem. So should you just give up? Not necessarily. But you do need to change your strategy. In 2026, you don't buy a home for aesthetics anymore. You buy it for its income potential. Aim for multi-unit properties, even small ones. Focus on revitalization zones where cities encourage density. And don't bet on a total market crash. With an estimated 3.5 million housing unit shortage, according to the CMHC, demand will continue to structurally outpace supply. Canadian real estate is not going back to what it was. We're living in a new reality. If you want to keep understanding how architecture, economics, and design shape our lives, subscribe to Billy Archi. Let me know in the comments, do you still believe in the Canadian dream of a house with a backyard? Let's discuss it below. This was Billy. See you next time.